Hey guys, wanted to hop on here today and talk TSP for a few minutes. We're past the mid-year point, which is kind of hard to believe as we get further into July of 2024. And mid-year offers a great opportunity to review things, right? So we've been talking a lot about rebalancing here recently. Just posted a video on how to think through that process or create that process if you don't have one in place. So check it out if you haven't. Hopefully it'll be a great resource for you. And really, what I want to do here today is take a look at the TSP, how the funds have been performing inside of it, talk a little bit about the US stock market, maybe give you some perspective on what you own within your portfolio and how things have been going. So we know the S&P 500 has been on a bit of a tear going all the way back to October of last year. And, all-time highs have been hit, limited volatility to the downside. Investors are happy, right? If you've been investing in large cap stocks in the US, you're pretty happy. Your account values are increasing. You're moving closer to your retirement goals, all things that we like to see. So it's a good time to be an investor, but we need to have some perspective on exactly what's been going on and create some checks and balances, right? So let's go ahead and take a look at tsp.gov and we can review account performance, fund performance year to date. And what I'm going to focus on here are the 5 core funds. If you know me, not a big fan of life cycle funds. I just feel you can create a better mix from those 5 core funds depending on what your unique situation calls for if you just spend a little bit of time with it. So we're going to focus on the 5 core funds, and looking at the page here, you can see the G and the F on the left side of the screen. Those are your fixed income, your conservative options. The G fund is the government securities fund, which is essentially guaranteed. Rates of return are going to mimic money market, a short-term treasury, which is what the fund is composed of. And then the F fund, which is an index that's designed with corporate as well as government bonds inside of it. It does have some sneaky risk factors, and you can see that performance hasn't been great year to date. This thing does have downside potential, downside risk. Interest rate risk is a big deal when it comes to this. So if you're a conservative investor and you're including a large portion of the F fund, you need to understand what the risks associated with that are and what the right mix is for you within your portfolio, okay? What we really want to talk about, of course, are the equity funds on the right side of the screen. So the C, S, and the I. And so I'll just give you a little background on each one of those funds. So the C fund is the S&P 500 index. It's designed to mirror that index. The S fund is a total stock market index. So it's designed to include all the stocks in the United States stock market outside of the ones that are in the S&P 500. And then the I fund, of course, is your international index, which gives you exposure overseas into those international markets. Now you can see the performance has been, it's varied, right? There's pretty big divergence between the C fund and the other two, at least year to date. And this has been a theme going back over the last several years, really. Small and mid-cap stocks have struggled in comparison to the large cap stocks in the United States. And international has also struggled just because international economies, have had a rough time. They're more mature economies and they're not being supported with as progressive as policy as we might have here. Let's take a look. So the C fund, you own the C fund. It's probably the largest allocation within your portfolio, which makes sense for a lot of folks. What do you own? Why has the performance been so good? Let's take a look at it. So the C fund, as we know, is the S&P 500, and the top 10 holdings within that index now make up 35% of the entire index. So 10 out of 500 stocks make up 35% of this investment index. So even more interesting, the top 3 names, Apple, Microsoft, and NVIDIA, make up more than 21% of the total index. So if you didn't know, if you're an investor in the C fund and you didn't know you owned Apple, Microsoft, and NVIDIA and some of these big names, you're a pretty significant investor in those companies based on owning the index, okay? So it's interesting to know. And that's what's been driving the performance of this index. The top 50 names, really the top 10, have been leading the way. A lot of enthusiasm for artificial intelligence, money flowing into technology companies, but it's been supported by earnings so far, right? So these companies are making more money based on this. It's not just wild speculation. We'll see how that continues to develop, if money continues to flow in that direction. The top 50 is leading. Does the rest of the index keep up? Or at some point, does money flow there and they catch up? We'll see. Historically, that has happened. And then, even the same could be true with small and mid-cap stocks. Are they going to catch up at some point? Remains to be seen. So, but if you didn't know, that's kind of what you own within the S&P 500. And I'll give you something, we'll dive a little bit further into the weeds here. So within those 500 names, half of them are essentially growth oriented, half of them are value oriented. What that means is you got tech companies on one side, you got your energy and financials, more conservative companies on the other side. And you can see here, the yellow line is the growth oriented companies, and the performance year to date has been almost 25%. And then you got the value companies on the other side of that, which is really lagged at 11%. So you split the difference, that gives you the total return of the index. So you can see how the growth side of the equation is really pulling up the total index. So the S fund, is this worth keeping in your portfolio? I mean, small and mid-cap companies have always been a really interesting investment idea within the United States economy. And you probably recognize some of these names. I think it's just interesting to look at the names that you own. This is a pretty big index, but these are the top 10 holdings. So just taking a look at that. Diversification is always a good thing when it comes to volatility, right? So if you're trying to limit the amount of volatility within your portfolio, owning more names is better than not owning more names, right? What to do about the international fund? We're not giving any recommendations here. We're just talking general information and giving you some background on what's been happening. International markets have been tough. So what to make of all this? The stock market's been performing well. Your account's been performing well. Really, the theme here is take a look at things, right? Create some checks and balances. If you haven't rebalanced, it may be time to consider that. But also take a look at your plan. What's changed within your plan? Is your time horizon still the same? Is it shortened? What about needs for income? What about your risk tolerance? All those sort of things that shape the right investment mix are things that you need to be considering, especially after we've had a pretty good run up in the markets. And if your portfolio has drifted, also a good time to take a look and see if anything needs to be tweaked or adjusted based on drift. And what I mean by that is if you've had 60% allocated to the C fund, that was your target, and it's performed so well over the last 5 years, you haven't looked at it, now it's worth 75%, that's a pretty significant drift from your target. So you may want to consider what the right target is and get back to somewhere closer to it based on the performance there. And it works in the opposite direction as well with negative performance too. So consider those things. Have some perspective on what you own, why you own it. I mean, those are the questions we always ask. When was the last time you looked at this account? And why do you own the investments that you own within it? So I hope you found some value here. If you have, would appreciate if you'd give us a like and subscribe, and we'll talk to you next time.